The redhead crossing the Bloomberg terminal, Reuters reporting that Amazon plans to cut up to 30,000 corporate jobs. Those jobs represent nearly 10% of corporate workers. Those jobs cuts are set to start on Tuesday. That, again, according to Reuters.
The irony of these companies cutting jobs is that it is exactly what the AI revolution does. Now, the stock actually falling slightly on that news, but the opposite should be what happens, because when these companies cut jobs, guess what happens, folks? Operating margins go up. That is the biggest risk factor for artificial intelligence right now. And there's a great interview that we went through in The Information that really talks about this transformation of artificial intelligence really benefiting the companies that are AI native style companies, like AI first companies, because they're most capable of profiting off of artificial intelligence. Because right now you have a lot of people that use AI, but they say it's kind of like giving Joe Blow a race car and saying, go drive it. And so the non-AI first companies will probably profit the least. But when you have a company like Amazon, this is a company that's clearly at the forefront of the artificial intelligence revolution, and they recognize that, hey, artificial intelligence is going to let us cut a vast majority of low-level work that we just don't need at the business. So is it a surprise that corporate staff are going to get cut, especially more entry-level positions? No, not at all. In fact, that's what's happening across the board at companies across the entire country or even across the world. And this is normal. So guess who wins? Is it people that win? On net, no. People don't win. It's corporations that win. Corporations end up winning because they can lay off 10% of their corporate workforce, let's say, and then what does that end up doing? It props their margins. You've already seen this happen at Amazon. Look at this. Amazon year over year went from an operating income, so an operating margin of 9.9% to an operating margin of 11.4%. Just in the last year, before even this announcement, they've already reduced their G&A expenses from over $3 billion to under $3 billion in a quarter. And that is likely now to accelerate as they lay off even more people. Now, who wins? And this is the big thing about, well, frankly, this artificial intelligence revolution. Who wins? The corporations win. And that sucks for people on net. Look at this particular chart here. This was an interesting one. So this particular chart shows here Rage Against Machines, U.S. change in employment a month after the release of GPT 3.5. And so what you end up finding is that AI adopting firms and non-AI adopting firms had no real net change in their senior employees. So the ones with, as Andrew Karpathy says, agency are the ones that stay. What does he mean when he talks about agency? What he means is the people who have the ability to make decisions, to allocate resources, the people who take the benefits of encyclopedic or resource artificial intelligence, the pattern recognition that we get from the models of AI, those people who then apply the results of AI, the senior developers, the executive staff, the corporations, they benefit from artificial intelligence. But the entry-level workers who don't have agency, who don't have the ability to allocate resources, they lose. And so this Amazon announcement about laying off 30,000 employees, this should come as no surprise, and it's expected to continue to happen across our entire economy. This individual in this artificial intelligence piece by The Information, they actually talk about potentially a third of workers. See, they say the US's economy has a $15 trillion labor force and suggest that maybe you could replace in the next 5 to 10 years 1/3 of the labor force with artificial intelligence, replacing $5 trillion of the labor force with artificial intelligence. There's no question that, yes, AI will somewhere create new jobs, new startups or whatever. For example, hey, if House Hacks AI, Reinvest AI keeps booming the way so far our technology has been booming. I mean, we're at almost $500,000 raised in 36 hours now since we put out sort of our reinvest.co artificial intelligence roadmap over here, which is really cool at reinvest.co. Obviously, this video is not a solicitation. Read the offering circular here. But you can see all of our goals and milestones. Just go to househack.com or reinvest.co. It's the same company with a different DBA. But yes, startups are going to hire people. Like as our AI booms, which I expect it will, we are going to hire people. But I think on net, you're going to lose. I mean, we're not going to hire 30,000 people like, Amazon just laid off, right? And we'll hire like 3 of those. Like how many great startups could you have to pick up those workers? And so this idea about, but we're going to create jobs with AI, yes, but very slowly. So at first, you could see this massive loss of employment from artificial intelligence that takes decades to recover. But in the meantime, who profits? Big companies. People always wonder like, who's going to win from artificial intelligence? It's big companies. In fact, we also already know that the cost of developing chips is going to go down. The cost of buying chips is going to go down. The cost of using chips is going to go down. You're going to see deflation in chips, deflation in service provider, white collar job pricing. The benefits of those are the aggregators of all of that. Big corporations that now don't need as many employees on the white collar side that could benefit most from cheaper AI chip prices. Like, sure, do small companies benefit, or do you and I benefit from cheaper AI prices? Sure, I guess I could use GPT more and maybe it doesn't cost $200 a month for the pro version. Maybe it'll cost $99. Well, whatever, right? Who cares? What really matters is that at scale, a company like AI or Amazon can now utilize AI to blow off 30,000 jobs and start firing people. Understand what 30,000 jobs is, okay? 30,000 jobs on a white collar job, call it $125,000 a year. Plus, add in 20% for benefits. Actually, probably more than 20%. Add in 20% for workers' comp and retirement and regular stock comp. Now add in additional competitive benefits to work at Amazon. You're probably looking at another 40% for employee-related costs, perks, vacations, and otherwise, right? That means per 30,000 worker, you're probably looking at a $175,000 package. Multiplied by 30,000 people, that works out to $5 billion. $5.25 billion a year. See, that's, $5.2 billion a year. That money can basically go straight to Amazon's cash flow. They're still going to provide our crap every single day. They're still going to end up replacing people with symbiotic robots probably in their factories and eventually, maybe humanoid robots to actually deliver our packages. That'll all come in the future. We're still going to get our packages. But this white collar workforce reduction, that's kind of the problem that we don't really think of yet, and who benefits. I'll tell you exactly where that $5 billion goes. So that $5 billion per year works out to about $1.2 billion over here in the G&A side, which basically goes straight to profit, right? Straight into margin. So where's that going to show up? It's going to show up in their cash flow statement, which they actually put it on top. So it's going to show up right here. See right now, they're cash flow neutral right now. Cash flow equals 0 on free cash flow at Amazon right now because they're blowing it all on chips. Okay, that cash flow explodes not only positive again as you lay off white collar workers, but it also, as you stop buying as many chips, your cash flow machine is insane at Amazon. Yeah, you're going through a capital intensive investment period right now, but how lean these companies are getting. This company is becoming massively lean. I mean, honestly, it's almost an investment. I don't own Amazon, but this is almost like, as I'm describing this is almost becoming an investment thesis to invest in Amazon. Ironically, the firing of white collar workers, which will be very bad for humans, which I guess in a circular manner means people will buy less on Amazon if they can't get new jobs, right? Which is also then bad for Amazon. But for right now, let's see what that looks like. So Amazon has a share price of about, $226. Get some details here. $226. We've got EPS of 833 for the end of the year. Okay. So what we're going to do is we're going to go 226 divided by 8.33. That gives me a 27 PE ratio right now on 2025 numbers. Now, growth of earnings, I'm looking at 10.4 plus 22.7 plus 15.6 plus 15.4 equals divided by 4. I've got growth of earnings of 16%. Wall Street growth next 4 years averaged, right? So if I take 27 divided by 16, holy smokes, they're trading for a 1.68 peg. That's cheap, for what Amazon is. I mean, they're basically selling, they're a very labor intensive business with their fulfillment services, but that's a fair valuation in this economy. That's a fair price for Amazon. And frankly, their EPS growth could be substantially greater if they do keep laying off HR related staff or white collar related staff. So really, when you put all of this together, I hate to say it because it's like so anti-human, and like I have major empathy for like people losing their jobs. I have major empathy for just the human condition, like what is AI going to do for us? And I believe, and I say these things on my channel not because they're popular. I think a lot of people, when they hear me say things like, oh, like this whole LLM thing, this isn't that big of a deal. Like this is really pattern recognition. Really, you should watch this in full. Okay, I did a breakdown on this in the Meet Kevin app. Remember, you could get the Meet Kevin app for free. Like this weekend, I was sitting watching AI, videos, and I'm reading AI books. And, I break down some of this on the difference between here. You could see on the Meet Kevin app. Patterns of AI, pattern fitting, the mental sandbox, reinforcement learning, supervised learning, LLM scaling, whatever. You could see all this kind of stuff along with projections and otherwise in the Meet Kevin app, which is kind of cool. You get the app for free. You could also get the daily wealth in there, which is sort of a daily notification I send out. If you want it, you can enable it or disable it. And you could decide to get that if you want. I think it's a cool little newsletter we do daily. See, if you actually go to the app, you could go to the little hamburger menu at the top and then pick, oh, I don't want the daily wealth reports, or I do, or I want Kevin's alpha reports. But that's for course members. Sale ends Wednesday, by the way, for that. But anyway, I do worry dramatically that we're going to have, over the next 5 years, this dramatic decline in labor and the labor force. And it's going to really suck. Like, we're going to have a renter nation, basically. People aren't going to own real estate. You will own nothing and be happy, right? And I think the people who will get the most screwed are going to be people who are really heavily leveraged. So you have a lot of margin debt, personal lines of credit, SoFi personal loans, buy now, pay later. You're living the leased lifestyle. You have high expenses. And then what ends up happening is you lose your job. And you're like, well, this sucks, and then you lose your job. And then you're like, crap, I can't get another job. And, that's where eventually you get this like slow bleed economy that really just hurts people before we actually get the generation of, the new wave of jobs. It could be decades, frankly. So this revolution we're going through in the labor market, it doesn't have to be we lose jobs now, we get jobs tomorrow. It could be we bleed jobs for the next 5 years and we get jobs in 15 to 20 years. And so if you're not mentally prepared for how are you going to be different, how are you going to be the allocation of resources agent versus just the person who's replaced because your knowledge job is replaced. If you're not thinking about that, then you're thinking about AI wrong. Like if you're thinking, I'm going to wake up every morning and have AI summarize my life and tell me what to do, you're going to get replaced. And this is what I say regularly. Like somebody left a video or a comment. I'll share this because I thought it was very interesting. I replied to this on X and I thought it was very, very valuable. So I did a 40-minute video breakdown on, the aircraft. And somebody here writes, love the AI summary on a 45-minute video, LOL. And like I gave what I thought are millions of dollars of life lessons, right? So I wrote, wow. My response was, wow, the loss of context is insane. Imagine someone giving millions of dollars worth of perspective for free to be boiled down into a one-liner that loses context completely. It will create a two-tier division in learners, right? This two-tier division in learners. Because you're gonna have people that, like, there are gonna be people who watch this video and go, wow, I learned a lot if I ever wanna be a pilot. I learned a lot if I want tax benefits. I learned a lot if I ever wanna own an asset like an aircraft. I learned a lot about, different aspects of life, right? And so they're gonna be the people who learn and then avoid making very expensive mistakes or take advice from this and go, wow, I can make really good decisions because of the advice in this. And then there are gonna be other people who do an AI summary and be like, forget about it. That's the other thing that happens with AI summaries. You forget, Remember, an AI summary is basically skimming an article and then it doesn't embed into your brain. Like when I read a book, like I'm reading this, Machine Learning and Finance, right? And I go to even just this right here. This book is written for advanced graduate students in academics and financial econometrics, management science, and applied science, statistics, in addition to quants and data scientists in the field of quantitative finance. Bro, I can barely even read the sentence because it's so high level. Like, and I'm not saying like I'm at these high levels. Like I try my best to read this, and there's a lot of work involved in this, and I enjoy what I'm reading. Especially since this is an older book and learning about, Gaussian processes or whatever. Like, I love this kind of stuff, but it's hard. But it's like, if we don't challenge ourselves to that kind of stuff, we're just going to get replaced. And so, you skim AI everything, you're going to get replaced. So it's sort of like like this Amazon layoff is really a warning to everyone to wake up. And I think really, if we look at this AI interview here in the information. This is called Vinod Talks AI Power Struggle, blah, 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 blah. Most enterprises who are executing AI are doing it with their people who are not qualified to execute it. Well, the non-qualified people, those are the people who are going to get fired. And so you will see these, they talk a little bit about increasing margins at AI companies. Basically, they make this argument like there's so much profit in artificial intelligence that like, don't worry about AI margins. There's so much money that even if prices come down, companies will still be able to make AI margins. This is really true, by the way. Like, if you're at a 90% margin on AI, who cares if you go down to a 50% margin? It's still really good. So there's so much, that's the benefit of companies with huge pricing power, with huge PP, because there's so much money you can make. You look at like Six Flags, for example. We were doing a deep dive fundamental analysis on this. They have like an 8 or 9% margin. There's no room for you to cut prices because you have no margin. You have no PP. You have small PP. So, here, if you're paying $100 to $300 an hour and your cost is $1 to $3, you have massive room to cut prices. Exactly. But that all cuts into labor too. Like the attorney today who could do so much more work because they can hire so much more staff. It's kind of impressive. The question is, how much work is there for that person? So it's kind of a weird time. We'll put it that way. But I think this Amazon layoff is a little bit of a warning. And so it's not that it's, a fraction of their 1.5 million people that work there. What is that, 2% or whatever? It's that it's like 10 to 15% of their corporate workforce fired because of AI. And that's the corporate workforce. They're the ones who get the stock comp. So it's actually less dilutive to Amazon stock, right? Because usually it's the corporate workers that get the stock comp, not the fulfillment drivers, right? So you're paying less out in stock comp. Kind of scary. Kind of crazy. Argument is not that you shouldn't use AI summaries. The argument is when you use AI summaries, you are much more likely to forget what you read. So sometimes what I'll do is I'll read a book or read a passage, I'll read a whole thing, and then afterwards I'll do an AI summary, right? And then I'll compare. I rarely do this, but sometimes I'll do. Like we can even do it right now on this interview here. Summarize, okay? So we'll do it together here. So key points. Enterprise AI struggles are largely due to in-house staff lacking qualifications to execute AI projects. Margins for AI projects are expected to improve. Both algorithmic efficiency and cheaper hardware will drive cost reductions. Pricing for AI inputs will rise when people derive greater value. Circular financing is not inherently alarming, right? And he makes the analogy regarding GM, right? Okay, so like, that's great. But if I just read that quick little summary, I might forget all of it. But see, now if I put my context hat on, what do I remember? Or like, what do I think of if somebody asked me about this article? Well, I think about his reference to, which is from the actual context of the interview, because this was an interview. Hey, is NVIDIA financing OpenAI deals bad? Well, he gives a really good point. He says, well, it's kind of like GM financing their cars, isn't it? Their customer is able to buy more car or more chips because of financing. And I'm like, well, I can't really dispute that. That's actually a really good point, and I appreciate that. And so now I remember that codes into my brain neural net more. I already forgot the AI summary, because I remember that context way more than the scenario. Circular financing, not a big deal. That context ingrains in my head. This idea about in-house staff lacking qualifications, I didn't really get anything out of that article regarding this, right? But what did help me was thinking about Karpathy's post here about agency. It's the decision makers who utilize AI, who benefit from AI. I could see that. Okay, so then I try to put myself in those shoes. So if 2 years ago, I had to hire 2 or 3 people to help me go through, earnings calls to find really specific niche things, I can now use AI to give me a head start. Then I can personally go look through it. And I've basically now replaced the human pre-researcher with AI. Then I can go read it myself and get my own context. But now I'm spending my time reading where it's potentially going to be most valuable rather than, going on a goose chase, right? So those sort of contexts, I think, get lost substantially when we just use summarize tools. So I think it's how you deploy it, right? If you summarize to find where you want to spend your time and then you get your context, that's probably good. If you get your context and then summarize to help you remember some of the points or see if you missed anything, that's probably good. If you're only going around summarizing everything and hoping that AI agents are going to run your life for you, probably going to lose.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.